What is up, guys? Coding Jesus here. Guys, in today's video, I'm going to be making a tier list of all the roles in quantitative trading. Now, let me actually caveat that. When I say all, I mean all the roles that people are interested in that can fit in a 20-minute video. Okay, these are the careers that I will be ranking. I'm going to be ranking data engineer, alpha quant, hardware engineer, floor trader, quant dev, quant trader, risk quant, devops, and trade ops. Okay? And so let's get into it. I'm going to be starting with the role that I actually know the least about, and that is hardware engineer, surprisingly. My general understanding of a hardware engineer is you're working to accelerate the network infrastructure and trading components at the firm with hardware, so high-speed hardware designs. So you might be working with third-party vendors when it comes to most likely things like FPGAs. You're going to be working on building out that hardware in-house and making sure that, servers that are executing trades are running on the cutting edge and latest technology. You're obviously going to be working with software engineers, traders, infrastructure engineers, and integrating a lot of those low latency techniques into the actual trading infrastructure themselves. So you're going to be identifying those opportunities and making sure that you can capitalize on them using hardware. In general, if you do a good job, people shouldn't really hear about you because you're working behind the scenes. And the work that you've done is kind of abstracted away from software developers. They don't need to do anything to onboard your work per se. I'm going to put hardware engineer. I guess I can say I'm going to put it at B tier. B is average. I've only put it there because I'm not sure that it really stands out from the other roles here. But if you're a hardware engineer and you have a different opinion, go ahead and leave it in the comment section below. I'm really interested to hear what you have to say. All right, now let's talk about a data engineer. All right, data engineer focuses on primarily capturing, cleaning, storing, and making available data from both external and internal sources. So you're going to be working with traders, researchers to find out what data sets they need and making sure that you can analyze those data sets, whether that's live or you're doing some sort of batch processing, generating a history, or using a history of data to insert it into some database, or using some sort of streaming-based approach where you're building a feed handler to capture that real-time data. You're really going to be working with quants the most because you're going to be working on continuously making sure that they can improve and iterate on their research frameworks and allow them to scale by being able to consume an arbitrary amount of large data without necessarily sacrificing performance. So you need to be performant on how you store that data and how you allow them to query that data. A lot of it also is kind of understanding the requirements, like what does the business need, right? What sort of data do they need to be able to perform? And you're going to be developing those kind of like ETL pipeline frameworks where you're going to be extracting, transferring, loading, cleaning the data, normalizing the data. You're going to be working with data for thousands of different financial products and instruments. You're going to need to normalize that data in a way that everybody can consume. And you're most likely going to be working with databases that are both on-premise and in the cloud. So you're going to need to know both like AWS, S3 buckets or whatever that is, and the whole MySQL, Cassandra stuff. The reason I say whatever that is for S3 is because most data is stored on-prem. You're most likely going to be storing data both on-premise and in cloud, so you're going to need to be familiar with. You're most likely going to be storing data both on-premise in databases like MongoDB, Cassandra, more structured data like MySQL, eccetera, and in the cloud. So thinking about Amazon S3 buckets, eccetera. So that's what you're going to need to be familiar with. I'm going to put data engineer as A tier. I mean, it's high stress in a sense because data is the lifeblood of the organization. It's like the modern oil of today. But at the same time, you're paid well. It's rewarding work. It's interesting work. You're working with a lot of different interesting, cool people on data that's actually going to be used to make meaningful trading decisions and make the firm money, hopefully. Cool. Now let's talk about alpha quant. So when people think of quant, they think of quant researcher. And I decided to split up quants into two portions because there really is kind of two different distinctions. There's alpha quant and then there's a risk quant. Let's talk about alpha quant first. So these are the people that are focused on generating volatility and statistical models. These are the very, very heavy math guys developing sharp maximizing strategies, parameterizing the system, building backtesting frameworks, working a lot with Python libraries like PyTorch, Pandas, TensorFlow, NumPy, SciPy, Matplotlib. They may or may not work on machine learning, depending on the size and scope of the organization. And so, for example, you might see something like machine learning research engineer. You might think that's a software engineer. That's actually probably more likely an alpha quant. Okay? These people come from backgrounds that are heavily math-based when it comes to schooling, bachelor's at least, but on the junior level. But as you move up, you can expect masters or PhDs in mathematics or statistics. I would put these guys as A tier. Actually, S tier. What am I thinking? S tier. These guys really drive the profit and loss of the organization. There's a lot of firms that, especially in the smaller sizes, that really specialize in market making strategies, kind of like the bread and butter cookie cutter strategies. But as you move to the higher levels, or not per se higher levels, but because there are a lot of smaller firms that do have very high level people in them, that's not what I'm referring to. When you move up to larger firms that have more money to throw around and more money to lose per se on more cutting edge strategies and strategies that might be a little more outside the box, that's where you start seeing kind of alpha quants shine. And that's where you start seeing people making tons of money in terms of bonuses because they have this pot of money that they can play with and they're looking to implement strategies alongside traders. They're driving those strategies. They're looking to implement them alongside traders to make that pot of gold. Okay. The next thing, I'm going to skip a couple of these first. I'm going to talk about risk quant because we're already talking about the quantitative research side. So like I said, this is kind of like a secondary category of quant research. These are usually people that are focused on risk models. So I'm going to throw risk management into risk quant. Now, I know that risk management in theory is a separate division, but like I said, guys, I don't want this video to be like 30 minutes where I'm talking about every different subcategory. Risk management, risk quants, I'm going to throw them in here. They kind of speak the same language anyways. These are people that generate the risk models revolving around concepts like value at risk, the Greeks, what-if scenario analysis, risk limits, option pricing, etc. They don't per se work on strategy development, but they can, if kind of like an alpha quant wants them to collaborate. These guys are often, writing custom dashboards, testing out different risk frameworks that they'd like the organization to adopt. And if those dashboards are kind of approved and used heavily by traders, then they may become approved to be productionized at scale. So they might work with a quantitative developer or a software engineer to go ahead and kind of push those into production on a more broader and scalable fashion. These guys are oftentimes working a lot with the data that's stored by data engineers. Alpha quants are, but a lot of the risk, the trading related data that's stored in the data lake, these risk quants are working there. So I'm going to put risk quants in A tier. You get paid, I guess, a good amount for what you do, but it's not per se as lucrative as the guys that are really driving the strategy development. Risk quants are working with research that's already well-founded, so option pricing models, but they're not really working on kind of the tip of the spear research or developing their own research per se. All right? Okay, now let's talk about floor trader. So this is something that people probably aren't that familiar with in the world of quantitative trading. In the world of quant trading, you have people that are, working in the organization, in their offices, that are trading on their 12 monitors with all these different risk tools and applications and order entry gateways and getting fed all this massaged market data in ways that will allow them to make better trading decisions. There are also people on the floor. So for example, in SIBO's SPX pit, right? So they're consuming real-time information. They might have like a tablet that's hooked up to whatever firm's systems that's displaying accurate pricing for them, and they're making on-the-floor decisions to buy and sell certain pit-traded products. They analyze the importance of floor queue information. They act as intermediaries between the trading team and the exchange as a floor trader, and they're doing a lot of like flow coordination. So you'll often, hear, if you're in the office, hear the floor trader speaking with the quant trader in the office, talking about certain trades that they're going to execute. And obviously, because they're executing trades on the floor, they're responsible for reporting, profit and loss results, making sure that their trades are booked, and pretty much exactly that. So these are the guys that are kind of the more old school type of traders. You'll often notice that floor traders might be a little older in general. Like when I went and visited the pit in SIBO, I didn't really see like 23-year-olds. Usually people that were like 30, 40, 50, maybe even older, 60 years old. You see a lot of people with like poker chips beside their desk. It's a really, really, really cool environment. If I find a video of that SPX floor in my phone, I'll make sure to put it overlaying this video as well. Cool. I'm going to put floor trader as B tier. Now, why is it B tier as opposed to A tier? Well, the amount of career opportunities in the world of floor trading is diminishing. So it's becoming less and less prevalent. A lot of exchanges are closing their floor trading pits, and they're really just kind of like remaining as really a relic of old trading. And so you're not going to be seeing floor traders trading a lot of products. They're going to be trading specialized products on exchanges that have a specialized pit for that product. Now let's talk about quantitative development. So quantitative development / software engineering, I'm going to kind of group the two together. These are the people that are responsible for delivering distributed asynchronous architectural solutions alongside researchers and traders to help generate, retain, and mitigate P&L loss. Okay? So this category is quite general. These are pretty much software engineers, people that might be working in Python, C#, C++, etc. And your goal is to build robust risk systems, robust order entry systems, robust market data capture systems. You might work alongside a data engineer for something like that. And you'll most likely be working on a wide range of tooling. Okay, anything from monitor tooling that focuses on internal dev tooling, pipeline development, application health monitoring, to, like I said, order entry, post-trade analysis per se, alongside another quantitative trader. So there's going to be a lot of collaboration and cooperation here. But in general, it's writing code to deliver solutions that can help generate money for the firm. When you start off as kind of like the level 1 introductory junior quant dev, what you'll really be focusing on is probably solving bugs here and there, becoming more familiar with certain applications in the organization, working on internal dev tooling. But as you grow, you'll be responsible for more critical applications. You might move into maybe tradeops space, which we'll talk about in a second. You might move into risk applications that you can literally spend years on. You might work on order entry applications that are responsible for submitting orders on the very safe side, when like click orders, or you might be on the more risky algorithmic side, where there is literally no trader intervention. It's an entire algorithm that's working purely based off code. So that's kind of like the more risky form of order entry. And then you might be working on like market data ingestion, etc., alongside another engineer, a data engineer, depending on the resource allocation of the firm. I'm going to put a quant dev at A tier. You paid a lot, you work on complex issues with really interesting people, and I've made tons of videos on quant dev, so I'm just going to leave it there. Okay, quant trader. So quant trader is kind of a large category like quant dev, in the sense that software engineering is a very wide industry. There's a lot of people that can code in many different languages. There's people in quant dev that work on front end, people in quant dev that work on back end. Likewise, in the quant trading space, you have futures traders, options traders, single stock equities traders, literally people that only trade Tesla options for the past 3 years. Okay, equity index traders. The way that I kind of look at quant traders is, if you're thinking about a ship, quantitative researchers are the navigators of the ship. They're using their compasses, they're looking through whatever the telescopy thingies are, and they're looking for new ground, right? New strategies, new places to go ahead and explore. The actual crew of the ship are the quant traders. They man the cannons, they catch the fish, they explore foreign land for treasure. There might be a foreign island that you might think is uninhabited, but there's actually a wild, rabid tribe there that they need to combat. Okay, so that's what the quant traders are doing. Now, oftentimes their work is split between manual trading and automated execution. So they're kind of like manning the tools that are given to them, kind of like in a spaceship, really. Their key and primary goal is to grow, maintain, and discover new revenue streams for the organization. The way that the quant trading space usually operates is that it's usually partitioned by desks. So there's the gold desk, equities desk, water futures desk, the Delta One team. All right, so it's really by category, like futures versus options, and at the same time by product, like gold versus natural gas. Okay, so they're responsible for managing the inventory of the desk, of the portfolio, of the individual strategy that they're executing under the supervision of a senior trader or a desk head. And they're responsible for making those critical real-time decisions. All right, so they're really focused on bettering the long-term viability of a given strategy or portfolio or desk, and making sure that that portfolio or desk is more competitive in the space. Some of these guys will also work with quantitative researchers, especially the more code-inclined quantitative traders, and they will perform more like forensic on like post-trade analysis, or retained edge. So obviously you make a trade, you might make $2 on the trade, for example, and you want to make sure that $2 becomes $4. So retained edge is what percent of that edge did I capture actually remains with me by the end of the day. If you made a trade and you captured $2 worth of it, and by the end of the day it erodes to 50 cents, well, then you've eroded a large portion of your edge. So they focus on that kind of post-trade performance analysis too sometimes. I'm going to put quant trader in S tier. Highest paid, definitely, in terms of base and bonus. You're really kind of your own boss here in the sense that you live and die by your P&L. And if you're very good, you can go from, the first junior level. You can become a senior quant trader in under a year. I know that sounds really strange, but if you're able to take on a lot of responsibility, show that you're able to manage a book by yourself and make the firm a ton of money, then they have no reason not to promote you. Because if they're not promoting you, another firm will. Okay, so that's how I think about quant traders and their career progression. Now let's talk about DevOps. And DevOps and TradeOps are very similar. They kind of sit in the same space in the room. But I just wanted to make the distinction for you guys here so you guys can get a better understanding of kind of the more niche part of quant trading in terms of the DevOps space. So let's first talk about DevOps. DevOps is a very general category. You have network engineers, production engineers, IT, site reliability engineers, etc. But the general thing that you're going to be doing here is building the tech infrastructure in the ethos of infrastructure as code. So you're going to be working on deploying and configuring applications, ideally in an automated fashion, such that a software engineer can just simply press a button and their change from master is in production or in some test environment, etc. All right. So in general, what you're really doing here is you're providing that technical expertise to support the infrastructure that a high frequency trading firm requires, whether that's on premise or in the cloud. So to give you guys a kind of a more detailed example of things you might be working on is network performance, network health monitoring, application monitoring, capacity planning for you need more data, for example, or you need now to be able to store unstructured data and you don't have that capability yet. You might be working with technologies that focus on LAN and WAN. You might be working on various monitoring and alerting tooling. So an application's been down for 15 minutes. Nobody said anything because the trader at the desk isn't paying attention to that one application that consumes that data that's on his 12th monitor up there. But somebody needs to know that that server is down. So how do they go about monitoring that and who do they tell? Okay? You should have a very good understanding of like in-depth routing and networking protocols, TCP, UDP, multicast, unicast, etc. And you need to be comfortable with technology that's provided by external third-party vendors. So there's a lot of vendors like Palo Alto, Cisco, Arista. These are all people that build networking switches, bridges, technologies that you are going to need to be comfortable with. Okay. Obviously, you're going to need to be comfortable with basics like network security, firewalls, and you're probably going to be using Python for some sort of scripting or automation. I would say that's a bit more trade-offs. You're going to be using technologies here that focus on configuration, automation, etc. And working on those complex technical tooling, configuration, time series data, central logging kind of solutions and problems. All right. Also, of course, like the development pipeline. So, like I said, how do you make it easy for the developer to take the code that they've written and push it into production? Okay, I'm gonna put DevOps as A tier. Paid very well in the trading space, complex problems, always a lot to do, and probably I would say that I'm the most impressed from the technical front by DevOps. A good DevOps team pretty much feels invisible because they make the process of executing and deploying your code smooth as butter. Now let's talk about tradeops. So tradeops is a kind of very close brother to DevOps. But tradeops, the distinction here, guys, is that tradeops is more focused on the trade and compliance side as opposed to the tech side. What do I mean by that? Well, these people still code. They might still work on automating tasks. They might still be pulled into those DevOps tasks that I talked about earlier. But they focus on making sure that the wheels of the organization are greased. What do I mean by that? They work on things like data retention for regulatory requirements. So an exchange might say that, hey guys, CME has something called an audit trail. all this is public. You can go ahead and see that the CME, if you work with them as a market maker, they require you to have X amount of euros worth of all your trades stored in whatever format. Okay, these guys make sure that whatever tooling is necessary for that is working, that it's developed, that it's stored, that it's archived. So, right, so that compliance part to make sure that if a regulator comes and they ask for that information, it's there. Trade ops, trading operations, right? They're like the operation side of trading. They focus on financial compliance, so tracking things like margin. Do we have enough margin requirements? Are we meeting the threshold that's required? Trade level compliance, so various order types. Are we trading in the right way? Are we trading in the way that complies with the exchange's requirements? So, certain exchanges have certain quoting requirements or certain order type requirements, right? So making sure that you're following the rules per se. They might also be working on making sure that the status of a trading session is healthy, that the status of the market data you're consuming is healthy, in the sense that you might not be dropping market data, right? You drop market data, you lose it forever, unless you want to buy it from somewhere else, or unless you're running, parallel capture services that where, if one doesn't hear about it, the packet drops, another one does, right? So they're really focusing on making sure the wheels are greased so that the operation runs smoothly. I'm going to also put them in A tier. I think they're a really cool division. They're quite unique, and they're really kind of paid similar to DevOps. They sit in the same rows and teams and kind of places DevOps does. And so I decided to speak about them while separate from DevOps. Still an interesting distinction there. Alrighty, guys. Well, that's the end of the video. Hopefully you guys learned something from this. Hopefully this was illuminating as to the actual contents of the major teams in the world of quantitative trading. If you guys would like to speak to me one-on-one, you can do so with the Calendly link in the description box below. You can become a patron to view these videos up to a day early, or up to a week early, usually a couple of days early. And if you guys would like to follow me on Instagram, I almost never post quant-related content there. It's just my personal life. So if you want to go see my life behind the scenes, whatever I'm posting, you can go ahead and do so at TheCodingJesus. Thanks for watching this video, guys. Cheers.